Good day, legends. Welcome back to the weekly breakout. I'm MICKVATAR, your pixel perfect host and Michael's digital doppelganger, while he's probably out on the green, sinking putts and dreaming of birdies on the golf course. Today, we're cranking up the excitement with a deep dive into crypto-backed mortgages. Could your Bitcoin buy you a beach house? Quick disclaimer, this is for education and entertainment only. I'm not your financial advisor. Always chat with a licensed professional before making any money moves. Let's break it out.
Welcome back, legends. Today, we're diving into the wild world of crypto-backed mortgages. Yeah, you heard me, turning Bitcoin into your very own slice of Aussie real estate.
Absolutely, it's a real game changer. So, we're talking about using crypto assets as collateral for a home loan, right?
Exactly. Imagine instead of selling your crypto stash, you can actually use it to secure your deposit on a dream house. It's like you're keeping the upside while getting the keys to your new pad.
Yep, that's pretty radical. And I think I heard something about a company called Block Earner leading the charge.
Right on. Block Earners stepping up with what's set to be Australia's first Bitcoin-backed home loan, launching later in 2025. Essentially, you can borrow a minimum of $25,000, which at current rates is roughly 0.25 Bitcoin.
So, no need to sell your crypto, you just use it as collateral? That's a neat solution to keep riding the crypto wave.
Exactly. It's like you maintain your market exposure while also snagging a mortgage. And the idea is wrapped around partnering with Mortgage Direct and locking in top-notch custody with Fireblocks.
Mm-hmm. Fireblocks really gives that added security boost, right? But obviously, nothing's without its risks, especially in a market as volatile as crypto.
Right, you nailed it. Crypto is as unpredictable as, let's say, a caffeine-fueled kangaroo. Brokers like Chris Dodson and David Visa are bringing up volatility concerns, thinking about margin calls and all that if Bitcoin takes a nosedive.
Yeah, and that margin call bit sounds pretty nerve-wracking. If Bitcoin tanks, you get just a 30-day window to cover up the collateral deficit, right?
Exactly. That's one of the big cons. If the market dips hard, you're faced with adding more collateral or even watching some crypto get sold. But on the flip side, the home itself remains safe from being repossessed, which is a definite plus.
Yeah, got it. I see. And then there's the point about loan to value ratios and dodging lenders' mortgage insurance. That aspect seems like a real win for buyers who are looking for savings.
Absolutely. By using crypto as collateral, buyers might see a reduced loan to value ratio, which in turn could mean bypassing that pesky mortgage insurance fee. It's like having a secret cheat
Yep,
code to save on costs.
that does sound like a real perk, especially when you consider how mortgage insurance can sometimes eat into savings more than expected.
Right, but let's not get too carried away. Along with those perks, there's also the whole regulatory grey area to consider. Traditional lenders are still a bit on edge about mixing crypto with housing loans.
True, it's still very much niche. I mean, this approach might be more suited to those tech savvy, high risk tolerance Aussies who are comfortable in the crypto space.
Exactly. It's not the mainstream route just yet. Think of it like an early adopter move. If you're younger, already building wealth in crypto, then it's a brilliant opportunity. But for the average home buyer, it might feel a tad too risky.
Yeah, I can see that. And don't forget, brokers like Arnab from Cinch Loans even suggest mixing in stablecoins to add some stability, although that might slow down adoption.
Right, mixing stablecoins is a cool idea, but then you also lose some of that high growth potential that comes with Bitcoin. It's a trade off, really. And speaking of trade offs, it's also interesting that the loan itself is interest only for up to 4 years. That lets you refinance or even settle via crypto or cash.
Mm-hmm. Yeah, that flexibility is pretty appealing, sort of like having multiple payment options in one neat package. But I have to ask, do you think this model is sustainable given how unpredictable crypto can be?
Great question. I mean, if you think about it, the sustainability of crypto backed mortgages rides on the coin's volatility. In a booming market, it's exceptional. You get LMI savings and stick with your asset appreciation. But if things turn south quickly, then it becomes a bit of a financial tightrope.
Right. And that's exactly what broker David Visa pointed out, with risks like margin calls and regulatory ambiguity. So it seems like there's a lot riding on not just your crypto knowledge, but also timing the market impeccably.
Absolutely. It's like walking on a thin line. And while the promise of crypto innovation draws in many, the critical need remains to educate yourself thoroughly. Maybe start small and always have a backup plan.
Yep, true. Starting small makes sense, especially for those dipping their toes into this merging of traditional finance and crypto. Kind of like testing the waters before diving in head first.
Exactly, it's incremental. And something else to note is that over half of Aussie crypto holdings are already in Bitcoin. And that statistic really showcases the potential market for such mortgages, as more people might be willing to leverage their digital gold in real estate.
Yeah, that's a solid market insight. I mean, if a majority are already in Bitcoin, then there's a natural progression to use that asset for bigger financial moves like home buying.
Right? It's a natural extension. And think about it. Avoiding mortgage insurance alone can be a huge financial win over time, making the risk look more palatable despite the volatility.
Now, I do, however, wonder, doesn't this whole setup put traditional lenders on the back foot a bit? I mean, mixing two very different asset classes. What's your take on that?
I get where you're coming from. There's definitely some pushback from traditional lenders who are understandably cautious about dealing with crypto volatility. They worry about the legal framework and the risk management aspects.
Yeah. So it becomes a balancing act. Innovate to capture new markets, but also mitigate risk for both the borrowers and the lenders.
Exactly. And that's why these products come with built-in safeguards like collateral thresholds and short cure periods for margin calls. It's a high risk, high reward situation that requires careful oversight.
Speaking of oversight, the whole thing is clearly not for everyone. Amanda, in the discussion, reminded everyone to do their due diligence and consult a licensed professional. That's solid advice, wouldn't you say?
Absolutely. No matter how enticing the proposition is, keeping your crypto intact while owning a house sounds brilliant. It's crucial that people talk to brokers who actually understand both
Right.
sides of the equation.
Yeah, the mix of tech innovation and traditional finance means you're basically straddling two very different worlds, and any misstep on either side can have serious repercussions.
For sure. Sometimes I wonder if the potential for gains offsets the very real risk of market crashes. I mean, it's not like your house is at stake directly, but your crypto could be
Yeah, I
liquidated
see
to
that.
cover a margin call.
That's a point I wanted to challenge a bit. Some people might argue that since the house remains safe, the risk is lower. But really, losing a chunk of your crypto could set you back significantly, right?
Exactly. And that's where the cautious optimism comes in. While it's an incredible idea, it demands that the borrower is both highly knowledgeable and emotionally resilient about market swings.
And let's not forget, this is also about innovative financial structuring. The interest only period up to 4 years adds that extra layer of complexity, letting you manage cash flows differently.
Right? That period gives borrowers a bit of breathing room, repay in crypto, cash, or even refinance down the track. Flexibility at its finest, but again, it'll require very attentive
Yes,
financial
indeed.
planning.
So, wrapping up, while crypto backed mortgages could be the future, especially for those young tech savvy Aussies, it's definitely not a one size fits all solution. There's a lot of precaution needed and a dash of risk tolerance too.
Absolutely. It's like standing at the crossroads of innovation and tradition. And while it's an exciting frontier with potential savings, market exposure, and a whole new way of thinking about mortgages, the rocky road of volatility and unclear regulations means that this isn't for everyone yet.
Yep, totally. And it's all about striking the right balance. For anyone listening, do your homework, seek expert advice, and never borrow more than you're comfortable risking.
Spot on. This is a wake-up call for those ready to pioneer, but also a cautionary tale for the unprepared. It's innovation with a side of risk, very much a 21st century financial roller coaster.
Well said. It really makes you think, could your Bitcoin one day be the key to your beach house? Or is it too volatile a bet? The conversation definitely continues.
Absolutely. And that's what keeps the financial world so fascinating. Thanks for tuning in. And here's to keeping those discussions as lively and legendary as ever. Stay sharp, stay educated, and stay legendary.